What's up? I'm gonna give everybody a couple minutes to get in. For those that are rewatching this later on YouTube and Twitch and stuff, I have the people in the server. We gotta give them a second. We just announced we're going live, but I appreciate you guys coming through to watch this. So I'll give everybody like I don't know another like 2 or 3 minutes to hop in here, and then I will just Go ahead and start up. I'm gonna go ahead and get started. We've got a couple people in here already. What's up, Playboy? Oh, he wasn't here. So, something I want to go over today that I think a lot of people have issues with whenever they're learning smart money is they get caught up in all the noise. For example, we have price action that is clearly bullish on a high time frame. Let's just say that right here we have 4-hour price action. So that's what we're looking at over here. This is the 4-hour, right? So on the lower time frames, it's going to look something like this. And we know how this goes. In theory, we have that perfect picture, over here, just straight move up, move down, move up, move down. But we know that in reality, it's going to look like this, especially on a lower time frame. So whenever you're looking at let's just say this over here is a 15-minute. That's your 15-minute price action. Well, we don't want to get lost in all of this, because at the end of the day, when we look over here and we say, okay, well, I'm going to short, we got to break a structure from this supply zone. Let me do this. So when we get a break of structure, over here, we look at on the 15-minute, here was your old swing structure. Oh, well, we broke structure here. We're bearish. We're making lower lows and lower highs. And in reality, we are just part of a 4-hour pullback. Because remember, after every break of structure, we expect a pullback. So price is coming down. This is what it looks like. We're looking at this right here when we're mentioning this, because all it is a pullback after that break of structure. So we always expect that, and we have to be aware that while the 15-minute is bearish here in this example, we have to be aware that that pullback can end at any time because we're part of a 4-hour bull trend. So, you know, your this can happen to you on a 4-hour. For instance, say this is the 4-hour price action. Maybe this is the daily price action, and the 4-hour is even bearish because I see a lot of people they get married to the 4-hour. While the 4-hour is great, and I spend a lot of time on it, we have to build our narrative with all of the time frames. That's what MTF analysis is, multi-time frame analysis. So in order to avoid getting caught in the crossfire, we have to just start from the top down. Excuse me. But we have to start, I start from a weekly. On Forex, I'll look at a monthly. Crypto, not so much because a monthly chart's just going to look ridiculous. But, anything that we have a lot of data, we want to look at the higher data sets because, for instance, you might be in a weekly bearish market and the daily is running, the 4 hours running, everybody's super, super bullish. And then, everything's not bullish and your longs start to get stopped, and it's not that you're using the wrong POIs or that you're not following premium or discount or not using the structure for whatever time frame you're on, but it's because you're unaware of the bigger picture, the narrative. And that's what I say time and time again when I say we want to build our narrative. So, um, you know, if we don't if you're not aware of what the higher time frame is doing, when I say higher time frame, I just mean the time frame higher than what you're on. If you're looking at a 15-minute POI and you're bearish in the 15-minute, well, you need to ask yourself, okay, well, is this, are we bearish in the 4 hour, or are we maybe just part of a bull trend and this is the pullback? Because remember, this pullback can end at any time. So once it ends, all we're doing right there is we're putting in that 4 hour high or low, and we're looking to take out the weak high. So shorting against that is just going to leave you confused and frustrated, and it's going to really mess your psychological perspective of price action up because you're not even really doing the wrong thing in theory. You're picking a POI that sponsored a break of structure. We knew that there was supply introduced in this zone, and you're just looking at 15-minute market structure. You're saying, okay, well, I'm going to target the week low, but all trends come to an end. Whether you're on a 4 hour, daily, 15-minute, 1 minute, weekly, all trends come to an end. And when we're looking at a trend on a lower time frame, we can always know that that's just a run on a higher time frame. So whenever the 4 hours bullish, it can be part of a daily bearish retracement. So, for instance, let's go to Bitcoin. This is a great example. So, if we have a weekly chart of Bitcoin, right now our bearish swing structure is insanely wide. We have this all the way down to here. That's your swing structure, all of that. So, whenever we are talking about structure, we expect a pullback into premium at some point. Now, that necessarily doesn't start right here, right? We don't know. We do. We can use other things like change of character and supply and demand to identify when that pullback is beginning, but we're not going to go over all that today. You guys that are in Playbit have already learned that from the classes. But I did want to give a little free game out with multi-time frame analysis because I've even seen people on Twitter getting confused. But we know that whenever we have this weekly price swing, at some point we want to retrace up into a premium. We know that we want to retrace up into POIs or draw on liquidity, maybe equal highs, maybe imbalances, some point of interest, whether it's supply or demand or a liquidity area, we're going to retrace back into that. Now, what would happen on the daily time frame? Let's just draw a line. I'm just going to draw this. Now, imagine on the daily time frame, how bullish would everyone be if crypto started to do this? I mean, it just started flying, right? Because that's a huge move. We're talking about 43,000 people have forgot what it's like to see Bitcoin at that. Everybody's gonna be bullish, right? And then we're gonna break down, and retail's gonna say, "Oh, this is just a retracement. It's just a retracement," and then it's how it always happens. And the reason that people fail to realize what's going on, it's not even some crazy smart money concept principles. It's just understanding that whenever we're looking at price action and we're looking at market structure, we have to be cognizant of the higher time frame. And HTF or higher time frame gets thrown around a lot. Like people think there's a set higher time frame. Now, while I'm navigating the markets, 90% of the time I'm on the 4 hour, the 15-minute, or the 1 minute. But so for me in my trading plan, I look at the 4 hours my higher time frame. But the term higher time frame can just mean a higher time frame than what you're on. So for instance, if I'm on the 4 hour, I'm aware of what's going on the daily. So right now, Bitcoin as bearish as can be on pretty much every time frame. But let's just say that Bitcoin started to break structure on the 4 hour, and we came all the way up and hit, I don't know, 28K again. I'm going to be looking more for shorts. Why would I look for that? It's the same reason why if we're bearish on a 4 hour that I look for shorts on a 15-minute. It's the same thing. Everything is always going to be proportional. If I'm looking, whenever we're trading on the 4 hour and we are in a bearish market and price is doing this, it's giving us that bearish price. I don't want to click. It's giving us that bearish price structure. We're looking to catch these lower highs. So we have our 4 hour POI, and when price comes into it here, we scale into our lower time frame and we see, price do this number. And we'll just say that this is that POI we had, this, and we're going to wait for price to do this on a 15-minute and get that change of character, that first sign of weakness. So if we're looking at a daily price leg, then why wouldn't we do the same thing on a 4 hour? Because remember, we don't really draw a direct relationship with time and price. We just use time to view price. And we know that the higher the time frame, the more data we're looking at. So the more credible it is. But if we're going to use a 4 hour supply zone and a 15-minute confirmation, then why wouldn't you use a daily supply zone with the 4 hour confirmation? Or maybe a weekly supply zone with a daily confirmation? Or a 15-minute with a 1 minute confirmation? It's the same thing. We're just using our higher data set whenever we're trading pro trend to give us areas of a possible entry for a continuation. How are we going to confirm it? We're going to use the lower time frames. So key takeaways there is you can be much more aware and much more able to identify, when a trend comes to an end by just going up a time frame. We know that we do use trade or trend to trade. We're going to use our 4 hour supply zones when we're in a bearish market, and we're going to look to short off of them, into the week low. Right? That is true. But at some point, every trend comes to an end. That's just how it happens. I don't know what this line is from. But we know that at some point, we're not going to be bearish forever. Even if we switch bullish and it's just part of a daily pullback, you know, or maybe we're bullish at daily pullback and it's ending, you're going to be able to catch that a lot more often just by looking around, being aware. Don't get stuck on one time frame. Don't force a narrative that you want. So, a little bit on building a narrative. Let's look at euro dollar right now. So first off, starting at a weekly time frame, we have our draw on liquidity, which is going to be these weekly equal lows. Right? We know there's a lot of sell stops lurking under this area. It's a huge liquidity pool. So we know, when we're building our narrative, that that's going to be a big target. That's our weekly draw on liquidity. So then we can go over and identify our weekly. Pretty clear we're bearish. So the weekly's bearish. Okay. We're probably coming for that draw on liquidity, but how do we know when we're going to go for it? Well, we can use our lower time frames to confirm this. We can look at the daily and say, okay, well, the daily, do a clean chart. We say, oh, well, the daily's bullish. We're long, only longs, right? Daily's bullish. We're going to the moon. And you are looking at it from the perspective that of expectational order flow, which you're not totally wrong, right? You're expecting us to continue up, continue taking the weak highs until we don't. That's not wrong. But how could you maybe be a little ahead of when you're anticipating that we're going to fail? Just simply saying, okay, hey, look, weekly equal lows. Got sell side liquidity, right? We know that that's going to be a target. Retail is viewing that as support. We know that we use equal lows as our draw on liquidity. So on the higher time frame, we understand that we have a target very close by. So The daily is bullish, but we're so close to this weekly target. We're looking to probably, I'm personally looking at some point to short down to this area. How else can we tell um, that this may be the case? Well, we have displacement down towards our zone, creating more false perception of support down there. Where did we expand from? Say we have that daily zone right. Let's use the daily order block, or you could use the entire zone. I'd like to use the wick too, from a supply and demand state. Now we know, okay, well, we want to just identify um, zones to get short, because while the daily is bullish, we're looking at this as we know what the weekly's telling us. And also from another market structure perspective, if we come up in this zone and we do start to reverse, maybe on a 4 hour, we could say that we have weak lows on the daily, because these lows failed to make a new high and they should get taken. If we come up in here and the 4 hour starts to reverse. So we're building that narrative now, instead of just getting stuck in a robotic perspective that daily's bullish, long, 4 hours bullish, long. Now, it's not wrong. Some of you guys that are newer to supply and demand are probably like, that's backwards. You know, that's what you've taught us, and it is. But I also want to stress to you that you have to be aware of everything and don't think of stuff in such a 2 plus 2 manner. Everything, all the concepts that I teach you have to be applied in a practical, real world application. You cannot just use one thing all the time, because we're working live market. We're not working on a test where you have questions that have a solid answer. That's where your style comes into this. That's where developing a genuine understanding of what's going on and why it's happening is extremely important. So another thing we can do with multi-time frame analysis is witness the beginning of reversals. So we've spoke about this a little bit, but whenever I'm looking to take a trade, like I took on euro dollar this morning, we posted the idea in the Discord last night. We didn't post a signal, but we did post the idea. And some of those who have been attending the classes or have been applying themselves to learn, I'm sure that a couple people took the trades by the reactions on the post. But we can use this multi-time frame analysis to kind of confirm our supply and demand zones. So for instance, we have euro dollar here, and we had our break of structure down here, break of structure up here. So that gave us our new swing range here, liquidity rates. So this is still our swing range. Theoretically, we're bullish, right? Theoretically, because we came up. Here's our break of structure. So here's our 4 hour high. Now, if you map like I do, this is not a break of structure. This is not a break of structure. It's all just liquidity rates, which also supports that higher time frame narrative, because that would make everything down here weak lows. Also, we're engineering more sell side liquidity. So, I'm pretty bearish right now on this chart overall, even though the 4 hour is bullish. But I do see that, or did see this zone. We have this fractal demand zone right here, and I wanted to take long from it. Now, how did I confirm that this zone was going to hold? Because I've been pretty bearish in this chart overall. From a macro perspective, we know that the dollar is probably going to gain strength as we go deeper into recession. Now, the reason I wanted to go long is we swept a lot of liquidity there. This clean low itself got swept as well. This would be your inducement low. I just posted an infographic about this. This is a good example because price came up. People thought, okay, it came into demand. I missed the trade. It came into demand. Even people that trade smart money. But in reality, that low was just placed there to engineer liquidity, and we left an inefficiency before we came down and filled it. So now we come into this zone. How do we know this zone's going to hold? Because, like I said before, I'm pretty bearish on this using my higher time frame narrative. But remember, we're on the daily. I'm looking to take a short from possibly up here. Same principle. We have these highs up here, and I would also go short from up here depending on price action as we reach that zone. So if I believe, because this is how we build our narrative, if I believe price is going to go higher, first before going lower because they're engineering this sell side even more. If I believe price is going to go higher because I've done multi time frame analysis and while I'm bearish, I still look at this like, okay, we're going to possibly expand to the upside a little bit, at least in one of these zones before dumping back down. So if I believe that, and I also see that we're bullish theoretically on 4 hour market structure and we have a demand zone, that leans me to say, okay, I might take some longs here. So I alerted that out to the group last night, said that this zone was a point of interest for me. And this morning, I got to my desk a little late. I actually got into the trade at a far higher entry than any of those who were watching during kill zone. New York kill zone from 7 a.m. to 9 a.m. right there. This area, that was the absolute bottom. So we're going to see a lot of volume come into the market due to institutions trading within that time period. Now, I didn't get in, I think, till around over here. I'd have to look at my actual chart that I do TA on. Yeah, see, I was right around. Now, why did I take this trade? Let me go to this other chart because it's clean. Um, there we go. So why did I take this trade? I came in. We're in my demand zone. So now, I've done all the TA on my higher time frames. I've built a narrative. I think that the weekly equal lows will be taken, but I also think that we just removed a ton of the sell side liquidity in the 4 hour, and we're going to come up and mitigate some of these supply zones in this draw on liquidity on the 4 hour. We have that fair value gap right there. So that would be the first target. So I've built my narrative. At the time that I was looking at this, we were over here before we had started to push up. So I had built that story and I had my where do I think price is going and why do I think it's going there? That's the first two questions you have to ask yourself whenever are starting any trade. If you don't have that, and I mean on a higher time frame perspective, if you don't have that, you're literally just going out blind and you're just saying, "Oh, I'm just going to mark up my structure on the 15-minute and I'm going to trade my POIs." And then you're going to get frustrated when it doesn't work. And it might work because you might get lucky and be trading in the right direction. But in order to gain, a full comprehensive perspective of everything, you have to look up on the higher time frames. But we came into the 4 hour zone. I believe we're going to trade higher. So if we come into a 4 hour zone demand zone, I'm going to look for what? A 15-minute break of structure. Now, this doesn't have to be swing structure because we know right here swing structure was very bearish. We got to break a structure right there. For me, your swing structure would have been swing high, swing low. So why are we longing down here? Well, we're in a higher time frame. We've done our multi-time frame analysis. We've built our story. So this is just giving me confirmation of what the higher time frames are telling me. I'm not building my story off of the 15-minute, but I am going to frame my trade around it. So we come down here. We have our internal high right here. That gets taken. So the optimal entry was over here because we have this demand zone right here that was created. We see price went up. It traded very quickly back into it. Now, I use the 1 minute to execute. So if you were watching this during kill zone, price traded up, took the internal high, gave us that break of structure. What is 15-minute 1 minute swing structure? Now, don't get wrapped up in 1 minute swing structure, but I did want to just make that point to you that we're just viewing price through candles. We're not getting married to the time. We're just saying, okay, well, if I can see the 15-minute swing structure on a 4 hour internal structure, I can also see the 1 minute swing structure on the 15-minute internal. Anyways, we know we have this demand zone. Price comes up, it trades into it. We could have used the 1 minute to confirm this zone. Okay, price comes up, breaks into this internal high. Where does it come right back down into? Right into that right there. And this is going to be range demand because a lot of people get stuck on order block theory and they only going to use this, which is fine if that's your strategy and that's all you use and you've proven to yourself that you have an edge. That's cool. But for me, whenever I'm using the 1 minute, I just use zones. If I can get a break above this, if I've built it along my high time frame narrative, I would just take longs. But unfortunately, I missed that. But it's okay, right? I got to my desk. I was working on some other stuff. Whatever. We missed the longs. I showed you guys I got in, I think, somewhere up here after we had that second break of structure. But this is when you're starting to see those first signs of strength. And you can see this pattern Say if I would have saw this pattern down here and price did the same exact thing, right? I wouldn't care because it's not in my higher time frame POI. It's not part of that higher time frame narrative anymore, so it means nothing to me. But since I did the homework and I got an open perspective of what I thought was going to happen, I was able to scale through everything and build my narrative of, okay, well, I want to take sells. My higher time frame, perspective is bearish, but I want to take sells from a higher area. Okay, if I think we're going to go up to a higher area, I can maybe catch some longs there. Okay, the 4 hours bullish, so I can definitely look for longs. But I may have been a little intimidated to take this long had I, just watched all this price action and not understood all of this. So we can layer that confirmation down. For instance, if we're counter trend, like let's look at Ethereum, had some good examples of this. Chart. So for instance, when we're trading counter trend, with Ethereum, we know that we had this fractal demand zone, this inside bar right here. We know that we had some demand in there. So when we came down into the weekly, if we're going to be aggressive and wanted to take longs from this, the reason I didn't was because I didn't really see what I wanted on a daily chart. But if you wanted to be more aggressive and watch on a 4 hour, okay, well, you could have said once we're down, we've filled this demand. You could look for that internal break of structure. You know, when did that happen? Right there. And yes, that's why I use inside bars. A lot of people wouldn't have saw that. A lot of people that will teach you market structure would have said it happened up here. But this was the true first sign of strength. Right? We took out that old high because we know that on a lower time frame, it's probably going to be swing structure. So if we go back, it was just a little off, but it was that same area. So once that happens, we know that we have demand creation because anytime there's a break of structure, we have demand created. So we could have said this whole zone right here, was demand. Now look how fast it happened. A lot of people, they think that price has to move away, but look, price came right up and it came back down into this zone. Now, if we want to refine this, now looking at on a 15-minute, we can say, we have a couple areas of demand here. We could say we have this flip zone right here, right? Because price came up into supply, bounced off of it, pushed through it, and broke it. That was the move, was the flip zone. Good old crypto price action swept it before it moved up. But we could also said we have our extreme, which is our last down candle before an up move. You could have used the last internal range. There's a lot of different ways you could have done it. That's all dependent on your strategy. It seems like this way was actually, I guess, the most accurate. That's where we tapped into because we swept this flip zone. But we can use this to our advantage. We're using multi-time frame analysis. We came into weekly demand, the 4 hour broke internal structure. So then we come back down. And remember, this was a 4 hour zone. We just refined it. So if we refine a 4 hour zone on a 15-minute, to me, it's still a high time frame zone. Even though I've trimmed it down, it came from a higher time frame zone. So we could have said, okay, well, once price comes into this area and I get an internal break of structure, I'm gonna, that's my confirmation to go long. Okay, look what happened. Broke internal structure in our higher time frame POI, and you could just use the whole zone. Again, it's a total, whatever your strategy is. Here, the flip zone again. A lot of times these flip zones are what you want to pay attention to in these situations when you're using these internal breaks of structure. So now we had the 4 hour internal break of structure. We've layered that down into now a 15-minute internal break. So now let's go back. I'm gonna hit the rewind so I don't have to pan all the way over here. Let's go back to the 1 minute. So let's look what happened once the 1 minute came into this area. Okay, you got faked out a couple times here. This is really choppy. This is just how crypto kind of is right now. But if you waited for the liquidity raid, which I've found to be almost necessary sometimes with some of these alts, but once we came back down into this zone, you would have looked for your 1 minute to shift bullish, which we got that right here. Then you came down, and if you used your stop loss right here, you got stopped out. Now, it's frustrating when that happens, but if you're confident in your zone, you got a second entry right here. There was your demand zone. Now, we know that the risk to reward at this point would have definitely, been high enough to account for any small loss we had there. So that's how you can layer, use multi-time frame analysis to layer in those positions and frame high quality trades. Because for instance, we know that, say if this was your position, if we're on a 4 hour, we started this on a 4 hour, where are we gonna, we're all we're doing is anticipating that 4 hour pullback. Because remember, the 4 hour price action is bearish, but we're in a high time frame POI. We start to see those internal changes of character. And what does that tell us? An internal change of character tells us that a pullback is beginning or ending. So if a pullback was beginning here, right? So if we said, here is our swing range, we'll just say right here, we would look to long. For me, it's just the first fair value gap fill or unmitigated supply zone in a premium. So let's just say we did that. Where is this little position size? So let's just say we long just up to there. Remember that 1 minute time chart is what we use to frame this trade. And this took a lot of time, took a lot of patience, took a lot of screen time, because remember, you're watching this from a 4 hour zone. And we got that 4 hour internal break of structure, 15-minute internal break of structure, 1 minute internal break of structure. So now you have all the time frames in harmony. You've done your multi-time frame analysis, and let's see where the stop would have been on this trade. For me, I would have done the low and then add 3 pips. So let's just see what kind of trade that gave us. We'll go to a 5 minute, and we know what happened here. But my point is, if you put the work in and you really are patient, you got an amazing trade there, counter trend, right? Just by doing all of your homework and waiting for the time, all the time frames to be in harmony. I know Flo's talked to you guys about this, but this is time effectiveness. This is waiting for the proper moment to execute a trade. You're letting all of the time frames shift, and that's when you're going to see that explosive move in price. Because what you're seeing when you're seeing new demand introduction, price returning to it, break of structure, that means more demand creation on a lower time frame. That's what you're seeing, is orders are accumulating. The market makers are showing their intention to push price higher. So you're waiting for confirmation across all of your time frames. Maybe you use a 12 hour, a 4 hour, and a 1 hour, or maybe use a 1 hour, 5 minute, and a 1 minute. Whatever that you've proven to yourself works, just layer your multi-time frame analysis throughout whenever you're looking to enter a trade. If you really want to see those explosive moves and you want to get those trade setups that will you can be more confident in. Because remember, supply and demand is created with every single break of structure on every time frame, whether it's internal or swing structure. And we can layer our confirmation through as many time frames as we wish. Now, the pros to this, when you're correct, you're going to get very explosive trades that you don't have to wait around on for an extremely long time. You're going to be able to, really refine your risk to reward. The more that you push it and kind of wait for each time frame to confirm. Now, the cons of this, you have a very good chance. Now, this is a great example, but you had maybe price came down to right in this area and just took off without you. That happens all the time. And now you sat there and you watched price and you wasted your time and you think you wasted your time and you say, man, fuck this. I'm not doing this again. And then you go back into the death spiral of trying to force the narrative that you want to see. Um, Personally, I don't mind missing out on trades like that. I've been trading long enough to where I know that there's going to be another trade tomorrow. There's going to be another. It doesn't matter. Catching bottoms doesn't matter to me. Catching every move doesn't matter to me. None of that matters. What matters is, for me, I get that higher risk to reward, and I don't have to take as many trades. Because at any strategy, whether it's smart money concepts, whether you're playing RSI divergences or harmonics, simplifying your approach is going to be the best thing that you can do. You may have very complicated concepts and a complicated strategy, to learn, but once you can simplify that pathway to you pushing that green or red button, You're going to cancel a lot of noise. You're going to take away a lot of emotion. And I promise you, if you're doing things right, you're going to refine your win rate and you're going to have a better overall experience trading. But it takes patience to do this. It takes putting in work and back testing and proving your strategy to yourself. But there's a reason 90% of people lose all their money. It's because 90% of people aren't willing to do stuff like this. Also, whenever you're going across all the time frames, you're building that narrative, right? You if you don't have a narrative, you shouldn't even be trading. That's why I tell people, don't sit here and just scan through your entire watch list and find every single trade to take. Now, you may have been doing that for a while now, and it may be maybe it's been killing it for you. And you're listening to this and you're like, oh well, that's not true because I do that and it works. Come back here in 6 months. You want to develop um, an understanding with one asset on a high time frame and really build your narrative for what you think is happening, because you're going to be navigating in a much clearer perspective, from a much clearer perspective, I should say. So key takeaways: multi-time frame analysis simplifies trading. It's going to lead you to less confusion. If you don't have a narrative, you don't have a trade. And we can layer these internal breaks of structure to confirm reversals or continuations. It's super useful while trading counter trend, like the example we just reviewed. Now, you can utilize the newly introduced supply and demand throughout multiple time frames in order to layer your confirmation, build your confidence, and lower your risk to reward, but also raise your chances of missing a trade. Maybe you just go down to the 15-minute. That's fine too. There's no right or wrong way to do it. There's the only right or wrong in trading is profitable and not profitable. So if you use the 6 hour, 2 hour, and 30-minute, whatever. There's like, for instance, Ebo, one of the best traders in this group, in my opinion, uses the 25-minute. I asked him, I was like, damn, you've been using the 25-minute. Some people would say, oh, the 25-minute. He's using it and he's fucking killing shit. So there's no right time frame. There's no wrong time frame. You just have to take these concepts and take the formula and apply it to your trading plan, because it's the sooner you can get it conceptualizing and trading, the better a trader you're going to be able to become. 100%. So that's really all I had on multi-time frame analysis. If you guys want to unmute and ask any questions, I'm going to go ahead and pull up the YouTube. I haven't even looked because I've been looking at my notes. If there's any questions. What's up, guys? Somebody said, oh, it's fucking N. And I appreciate you, Enigma. N, man. Brother, what are you doing? For those, any context, our guy N, he was on the stream, I think yesterday or maybe the day before, and he was getting hurt on some ape shorts. We told him to get out of them, but he's degenning again. And you're welcome, Zamora. No problem. I want to start. I'll start doing a little more towards Thursday and Friday. I'll start to kind of switch to an educational vibe instead of just live trading. But for me, Monday, Tuesday, Wednesday, that's my money days. That's when I like to trade. That's when you're going to see a lot of high impact news and a lot of volatility in the markets. Yeah, I am doing this every day. I do it Monday through Friday. And then for Playbit members, I do classes on Saturday, but that's just for Playbit. Yeah, Wizard, right? I don't know, man. Dude, ends wilding out. His port's on a roller coaster. Oh, and Frizz said he's been working on. And by the way, for those of you on YouTube, Frizz is a coder. He's from Playbit. He's super fucking smart. He's actually made quite a few dope indicators. But he said he's working on to test the optimal pullback after a swing break of structure per security. So it's going to be, for each different asset or currency or stock you're trading. Yeah, definitely. Let's hop on a call, bro. For sure. That sounds awesome. And any of you guys that are on the stream, Frizz, will you drop? How do I tell? Because I think I have one of yours favorited somewhere. Oh, it's right here. For you guys that are watching, Use Frizz's indicators, super dope. Here, I'll post his trading view in the comments. Super cool indicators. He has a couple. Yeah, give him a follow. Also, Zamora. So I do on Monday, Tuesday, Wednesday. It's 10 a.m. Eastern, and then Thursdays and Fridays 7 p.m. Eastern. I try to keep. It's usually right on the point with that. I will say to you guys, I won't be streaming on July 4th. You guys probably could have guessed that, but I will not be streaming on July 4th, which is Monday. That's a holiday here in the States. But yeah, for those of you guys that are just on YouTube, always hop in here, ask any questions you want. Today was kind of more of a direct topic, but a lot of times we're just live trading, we're catching plays live, and also reviewing and doing TA live by request. Yeah, it will be posted on YouTube. All these videos, they'll be posted. It should be like 15 minutes after we're done. And I really appreciate the kind words. It means a lot. I really do appreciate that. Somebody said, "Can I look at the logarithmic?" Oh, that's ZP. What's up, ZP? Daily. What chart? ZP. What time frame? Yeah, Wizard answered the question for you, Milos. So also, just a little bit on log charts. The only difference really is how the y-axis is spaced. So usually they're used for like back testing. Um, there's really not gonna show you. There's nothing. You might be able to see it from a different view on a log chart, but I don't recommend using log charts personally. Like if you're like a position trader and you're looking at the monthly and weekly charts and you're really trying to get like swings, then yes, you can use a log chart because it helps. Everything is a little more easy to see. Um, but I prefer using because basically what it does is going to fit your screen. It's going to fit everything, and it kind of, like I said, the y-axis is odd because we can see over here that Ethereum at 1500 looks about the same as it did at 4K. Kind of just fits it to your screen. I prefer linear scales. Oh, just to peep overall fair value? Yeah, I wouldn't do that personally. I would not do that. I think it actually would it be the same? Let's just see. It should be. That's actually weird to think about. It's kind of like a weekly log. It should be the same. So let's say we'll just do lifetime of what the fuck? Yeah, it's gonna be the same. Because what is this level? It's 2377-ish. It's around the same area. I personally wouldn't use the log scales, and maybe you have a strategy that's different. I'm not a big user of them. But yeah, if these kind of more educational classes they help you, just let me know in the comments, like the video, and also you can always comment. For those of you on YouTube, you can just drop some comments and say, hey, if this topic would help me if you do this and that, and as long as it is relevant and it would help enough people, I'll do a video on it. I do a video every day, so I'd rather have topics than just I love talking to you guys, but sometimes it's nice to have a direction, which I'm going to start to give a little bit more direct content for you guys, like today. He said it just feels like it looks like fat rejection. Because I mean, remember the fair value. It needs to be focused on price. Oops, wrong tool. So like if I drew this chart, makes my goddamn head hurt. What the fuck? Yeah, I don't know personally, brother. I wouldn't use it, but maybe there's something I'm not seeing that you are. But I would not use it. There's actually a time I had my log chart on and didn't realize it and was like, what the hell? I actually want to check Aussie dollar. I know we got a couple more minutes. I usually stay on for an hour, so I'll kind of just glance around. Um, so like for instance, this is a good example as well. Um, Aussie dollar structure has been pretty odd lately. For me, that was a break of structure. Another one, but we're starting to tighten up here. And it looks like that was another. So we've got a liquidity right here. A lot of liquidity got soaked up here. So while we're bearish, right, like in this, we've engineered that sell side liquidity. We came down into this 4-hour demand. I didn't catch any trades here. Our swing structure would be, this high and then this low. Or I'm sorry, I apologize. It would be, or no, I'm sorry. Again, this is completely backwards. Because we got that. We didn't get a closure there, but we did there. So you'd theoretically be bullish here because here's our high, here's our low. We didn't close under the low. Same thing with oops. Most USD denominated pairs are engineering liquidity on the weekly. That also is another sign that we're going to go into. It's not a sign that we're going to go into recession, per se, but for me it is because it's showing me that the dollar is poised to gain strength against a lot of other major currencies because we're engineering that sell side liquidity. There's sell side liquidity under here, under these equal lows, and then there's a massive area here. And looking at the daily or the weekly drawn liquidity, for me, it's this low right here. Well, we're going to clear these lows, probably ping back up, maybe to a fair value gap. But I just kind of look at where price is really moving violently away from and where it's leaving liquidity. So on the daily chart, we can get a swing low candle with like two candles that close higher than this one. Regardless of everything being bearish, I would look for us to come up and fill really this high right here up into this fair value gap. And that's just kind of like an ICT strategy. But the 4-hour for me is still bullish. So as long as DXY, which is the chart for the dollar, will agree with my narrative, what I see happening here is the daily range. We have a massive liquidity rate up here. So the daily is pretty bearish. These lows are going to get cleared at some point. We're engineering that sell side heavily. So I see, this as our range, but I would like to see a push back up into a daily premium. And the reason for that is this high, as of right now, I'm just anticipating. But if we start, like I said, if we get that daily swing low, this high is going to be a weak high because it failed to do its job and create a new low. We also have that sell side liquidity being engineered in the form of equal lows. Price came down to this fractal 4-hour demand. Now we not only definitely got a 15-minute internal change of character, but we got a 4-hour. Where is my trend line? Right there. Because if you look, a lot of people had set up here and they say we haven't got it. I think I actually did get it, but to me that was because this candle was our most recent internal high. It forced this candle to go down, created a new low. We went lower, lower till we didn't, broke above, and then we had this fractal demand, or no, it's not fractal. I apologize. The price came into that area. We saw some low time frame accumulation. This is reaccumulation. We kind of formed that creek, so to speak, to hop over. Price came up, hit that last preliminary support and pushed to the upside. Got our sign of strength. So at this point, for me, I would look. This is going to be a really strong zone in this candle. Did it get hit? It looks like it did. No, it didn't. So I would look for a push down into this zone because this candle is a sweep zone. It swept this previous zone. So it's a rate of liquidity, and we saw a big move up. You could refine it down to this area. Personally, I'm okay with watching this area. I'll watch price as it comes into it. But what I want to see is I want to see price push down into this area. Maybe we come up right now. It looks like going for, we probably form some relatively equal highs right here. Let's see. Yeah, right there. So you've got your buy side liquidity. You always should identify that. That's gonna get swept probably. What I can see is price comes up. You might get a nice liquidity rate set up. Low time frame break of structure with displacement, just like we saw on indices, and then push down into this area, trapping those early longs, removing their stop losses because we have these inducement lows right here, and we push back down into our area of demand, and that's where I would look to be a buyer. And again, that's what I'm doing right now. I'm just building a narrative. You see, I've went all the way from the weekly. I've given, why I think we're going to go lower. I want to look at the daily chart, but I do believe we could go higher first. So we're starting to exhibit those signs of strength. This is, what you would call accumulation. And this is why I don't like schematics, because I'm not a huge Wyckoff guy, but I also do understand what is occurring in accumulation. It's just demand creation and the manipulation of lows. In a nutshell, orders are accumulating to push the market up and mark up the price. And the market's going to go up and the asset will be distributed. But right here, I would look for, this is really our liquidity right here. If we could get a nice rate above that, I would look to the low time frames to take a short down to these lows. At that point, I'd be out, and then I'd be looking for 15-minute to go bullish again. Another thing I want to stress: while the 15-minute did go bullish, and we've kind of established that, well, what's going to happen if the 15-minute gets way up here? We'll just say it comes up here above that buy side liquidity, and then comes all the way down into here. Am I going to wait for a 1-minute change of character right there? Absolutely not. I'm going to wait for a 15-minute. And will I maybe miss the trade? Maybe, but so be it. I'm not going to, um, that's not how I'm going to base my trading plan, is being afraid of missing it. If you ever catch yourself about to take a trade and you're like making a decision so you don't miss a trade, just stop, because that's a um, very toxic mentality. Also, for those of you guys, I know I put Frizz's page up, but here is a indicator that he wanted me to share with you guys. All his stuff's super good. You have a Twitter, Frizz? Oh wait, that's cool. I didn't even realize that we had the fair value. Oh, he said hat negative. You should make one. You really should make one. But yeah, guys, I'm gonna hop off here. We've been on here for almost an hour, but I appreciate all of you coming through, and let me know in the comments. And also for those of you in the Discord, head over to if you want, head over to testimonials, drop a message, let me know if you like this new stream format, if it helped you. And yeah, I'll be on here tomorrow night. It'll be 7 o'clock again, Eastern time. And until then, safe trading. I'll see you guys later.